Little one Paul here. Today I'm going to give you guys another strategy. It's pretty simple. It's really effective. There's two moving averages and just basically another confirmation for the strategy. It works really well. I'm going to show you how to use this for crypto. I'm going to walk you through some of the other assets too with the strategy and how they would work for that. But it really helps you see the overall direction and basically when to enter your trade. Even if when the lines cross, and we're going to use it two moving averages, and if you miss the lines to cross, you'll have to go to the next indicator, and the indicator will kind of help you find the other moments to get in if you miss the cross. But anyway, I'm going to show you how to set this up. It's a 3-step process. It's pretty simple, but it really helps, and the results that you get from it are they're pretty good. They're pretty accurate. So it's a pretty popular strategy. So I'm going to show you how to set it up. It's pretty simple. I'll show you how to do it with crypto, and then I'll walk you through how to do this with the other assets. Okay, so to set the strategy up, what you basically need to do is you need to go to your 3 smooth moving averages, and you need to change your settings to 9 and 21. And you don't need the third one, but just make sure they're bright colors. And then the next one you're going to need is another indicator to confirm it. I use a relative strength index, but you can use another indicator if you want. You can also use MACD with this strategy, and it works about the same. So basically, the strategy is pretty simple. You wait for the 9 and the 21 to cross. And what I really do is I try to focus this on longer time frames, so you're not going to see these crosses as often. But you wait for the 921 cross, and you wait for a confirmation with the RSI. And you can see that if you wait for the cross, it usually, if you wait for the cross, it usually finds some pretty good moments. For Bitcoin right here, we see that it crossed right here, and you could have rode this on the hour. You could have rode this entire thing out from here, well, or even all the way up to here at the end. You can get out anytime you want. You could have got out here, here, or here. So what you do if you miss the cross? So you either go down to a smaller time frame and scalp it, or you can look at your RSI and look for the moment when the purple line crosses and goes up. So basically you'll see a lot of enter points of when to come back in. With the RSI, you can see it happen right here. There's a couple hours of right there. You got another one right here. And, since the cross. But then at the cross, you actually see it start happening right here. So you could use the RSI to kind of help you scalp it on an hour, or you can go down to a smaller time frame. So if you did go down to like the 15-minute, it's the same thing. Since we saw that the direction was up, we can actually go and find all the moments where it's crossing up. See it happen right here. It's also, it looks like it's crossing. Well, it's not crossing right there, but RSI crosses right here. Crosses right here. Crosses right here. Crosses right here. Here. And here. So there's many moments that you can use this. Basically what you want to do is you want to identify the overall trend first. And once you identify the overall trend, so in order to identify the overall trend, basically the 921 have to cross. So what's happening here with Bitcoin is it looks like it could cross down, and if it does cross down, it's the start of an official downtrend. So I don't think that's going to happen. I think we're going to actually push back up is what I'm thinking. And you see that happening with the RSI. You see it trying to cross back up here again. So I think it's actually going to start. I don't think it's going to cross. I think it's going to go back up. So, but when it does get weak, you'll be able to spot all those moments. Now, just like when You see it going up right here. You can easily catch down moments as well. Like what happened right here, we see it crossing down. So you could have got in right here. Could have gone right about here till down there. And if you miss that, there's moments, well, not on here, but there's just that moment right there for it going down. But it's the same thing for when catching downtrends. Since we're majority in a uptrend, the downtrends are hard to find, especially crosses. You see it happen again right here. You could have caught that cross right here and wrote it down. And if you missed that, you could have got in right about here. Could have caught a brief one right here. Could have caught a brief one right here. So what you want to do is you want to identify. You want to catch a cross first. You want to catch a cross with the 921, and I focus on higher time frames. I focus on the hour. Really, to find the crosses, I try to focus on an hour or more. So if you miss the hour, let's check some of the higher time frames here. Look at the 6 hour here. So we see a cross. See its uptrend. We see the cross happening right here. And you know you could have stayed in the trade because the lines did not cross again. So even if it went down, it did come and bounce back up. So it crossed, but it still bounced. So the lines didn't cross again. So you knew to stay in the trade, and you could have just kept going. So if these do end up crossing on a longer time frame, like the 6 hour, you know that's probably a true direction of where it's going to start going. If we see this crossing on the 6 hour, we know that the trend is probably going to start going down. So just like right here, you could have caught all this entire, where it crossed right here, you could have rode this entire thing out because the lines didn't touch again. And then we see that it crossed right here, and you could have rode this entire thing down. So if you focus on the much higher time frames, you probably make a lot more. So what I would personally do is I would look for the 921. I would look for it to cross on longer time frames, especially the 6 hour, because you will probably find some pretty good moves if you find it crossing on longer time frames. This is something I wouldn't do on smaller time frames. What I personally would do on smaller time frames is, if I miss the cross on a longer time frame, I'll just go to a smaller time frame. Bare minimum, probably the 15-minute, and whatever direction it's going, I'll see if there's either a cross with the 921 or it's crossing with the RSI. 3 steps you need. You need the 9, you need the 21, and you need a confirmation indicator. So you can use RSI, MACD, 80 and oscillator. Any of those will be a good confirmation indicator. So if you miss the cross, now I would focus on a longer time frame, an hour or 6 hour. Focus on the hour, the 6 hour, and if you miss the cross, result into the RSI or the MACD or one of them to find the moment where it crosses again. So you can go to smaller time frames. I only use this to kind of scalp it to, only if I miss the cross. But anyway, the strategy works really well. Works really well for crypto. I would focus on either 6 hour or the 1 hour to get the best results. But it really does help you, show you when the market's starting to go up or the market's starting to go down with trading crypto. But anyway, if you guys like this video, make sure you hit the like button, hit the subscribe button. I'll see you guys for the videos.